Welcome to the 2021 Small Business Week with the San Leandro Chamber of Commerce. I wanted to say thank you to our sponsors and partners in this, the City of San Leandro. Today we have an update from the Small Business Administration. We have Marlo Schindler with us, who is the Assistant Director of Lender Relations and Public Information Officer. Marlo, thank you for being with us today. Thank you for being with us all of 2020 as well and bringing us those updates. And we are looking forward to brighter days ahead. So I will let you take it away.
So as was mentioned, my name is Marlo Schindler. I'm the lead lender relations specialist for the San Francisco district office of the SBA. And I also would like to wish you a happy Small Business Week. This year, National Small Business Week is probably actually going to be in the fall, but this is traditionally when Small Business Week is, the first week of May. So it's great to be participating with the City of San Leandro and bringing you some updates. Throughout the week, we will also have more Small Business Week content. So I will be doing another presentation on access to capital. So that's going to focus actually on the traditional SBA loan programs, 7A, 504, Community Advantage, and microloans. And my colleague, Stefan Ash, is actually going to be doing another presentation on Wednesday on federal contracting with the government. So if either of those are of interest to you, you can go to the San Francisco District Office webpage, sba.gov/ca/sf for more information, or follow up with me, marlo.schindler@sba.gov. Happy to have you on those as well. But for right now, we're going to be talking about COVID relief. So we've had a number of programs going for the last 14 months now. So some I'm going to go through a little more quickly because they're sunsetting, and then some I'm going to spend a little bit more time on because they are brand new and they're the hot new topics. So let's see if I can advance slides. And I'll just, disclaimer language on this first slide. Everything I'm going to tell you is current as of today. I know this is going to be recorded and shared with people after the fact. So these slides are even a couple weeks old and already terribly out of date. So, obviously I'm going to give you the best content as kind of a snapshot in time. But if you have questions afterwards, it is best to go to the website, which is being constantly updated in real time as changes are made to the programs. So the main programs are PPP, debt relief on 7A, 504, and microloans, the economic injury disaster loan, or EIDL, and then within EIDL we have a couple different other programs. So there is targeted EIDL advance and supplemental targeted EIDL advance. Both of those are recent as part of the American Rescue Plan Act, or ARPA. So we'll spend a little time on those. And then the two brand new programs where we'll actually spend the majority of our time today are the Shuttered Venue Operators Grant and the Restaurant Revitalization Fund. So, I already mentioned the American Rescue Plan Act. That was the most recent relief bill. So I'll be mentioning several relief bills kind of throughout the presentation because those are what brought us all these relief programs. So it started with the CARES Act, modified by the Economic Aid Act, PPP Flexibility Act, and the American Rescue Plan Act. So as I said, if we get another relief bill, these programs could change again, or another act of Congress. So ARPA modified PPP in a bunch of good ways. It expanded the flexibility of how PPP funds could be used. It changed the covered period from 8 weeks to 24 weeks, or 8 weeks or 24 weeks to 8 weeks to 24 weeks, which has added some flexibility for business owners as they are applying for forgiveness. It added a second draw PPP loan. So, prior to this calendar year, you could only get one PPP. Now you can get two. It changed it so that a deduction of expenses covered with forgiven PPP loan that could be deducted on federal taxes. It updated the simplified forgiveness form to include PPP loans up to $150,000. That was previously just up to $50,000. So that's the majority of PPP borrowers are now able to use the simplified form. And there was a time there where we were having to, if a borrower had received an EIDL advance, which was the up to $10,000 grant that was available for businesses who applied for an EIDL loan. It was something they could get depending on how many employees they had. They would get $1,000 per employee up to $10,000. But then we were deducting that from the PPP forgiveness amount. But that was not what Congress had intended. And so that was changed so that the EIDL advance was no longer being subtracted from PPP loan forgiveness. So yeah, like I said, I'm going to kind of skip a lot of the PPP because we're actually, while the program was extended to run through May 31st, best predictions are that we are going to be running out of money this week or next week. So we're not going to make it to May 31st. So if you have not applied for your first draw or your second draw, or you are in the application process with your lender, you really want to make sure that you respond to any inquiries they've made of you, get any additional documentation that they're looking for, and clear things up so that you can get funded before we run out of appropriations. Once we run out of money, we run out of money. So anyone that's kind of anywhere mid-application process but hasn't yet received an SBA loan number, that's going to be it, unless Congress gives us more money. And this is a program where we have gotten more money twice, so it's not impossible that we'll get more. But like as of right now, when the money runs out, the money runs out. Which is important because also part of the extension was we had till May 31st to make new loans, and then we had an additional month to clear up anything that was kind of pending. But if we run out of money, then that second month, basically the month of June, where we had that ability from Congress to work through any loans that were still having problems getting through the application process, it doesn't matter if we don't have any appropriations, then we won't have that ability to do that in June. And if you are applying for PPP, the application process is directly through your participating PPP lender. It is not through SBA. So you would need to work with preferably the bank you already have your business banking relationship with, but there are a number of fintechs and other types of non-bank lenders that are out there that you could work with as well. But basically, like, you should already be in the application process if you're expecting to get money through this program. And then to kind of get, so the other side of it is forgiveness. So great, you've applied for the loan, you've received the loan. What happens if the PPP loan is not 100% forgiven? So in that case, it is a loan. It's a fixed interest rate of 1% that is non-compounding and non-adjustable. No requirement for collateral or personal guarantees, making it, very different from 7A and 504. No fees or prepayment penalties. So if you have been contacted by your lender and you were not 100% forgiven and you want to just pay it off immediately, you have that ability. Great, you can do it, and then you don't have to deal with the accruing interest. There is no prepayment penalties. It's a 5-year maturity for those loans issued after June 5th. If your loan was issued before June 5th of 2020, it's 2 years. But if you and the lender agree that a 5-year term would be more beneficial and would make it easier for you to make those payments, as long as you both agree, then it can be extended to a 5-year term. Payments start once the borrower knows how much the PPP loan is forgiven. Again, it's the lender that will notify the borrower, so you're not getting notification from SBA, you're getting it directly from your lender. And if borrowers do not apply for forgiveness payments, payments start 10 months after the last day of the covered period. And we're actually getting to that point now for some of the loans that were made early in March, April of last year. So borrowers must apply for PPP loan forgiveness through their lenders, and then the lenders submit the lender forgiveness decision to the SBA. So again, this is just kind of a reminder that you're not reaching out directly to the SBA on these issues. You are working with your lender, and then on the back end, the lender is the one working with SBA. And as I mentioned before, idle advances are no longer deducted from PPP loan forgiveness payments. So, good news there. Expenses paid with PPP loan funds are federally tax deductible. That's as much as I can say on that topic. If you do have questions about the taxability of PPP funds, but also of any other CARES Act funds you might have received, then I would direct you to the IRS. They have put out specific memos on the topic. So it can be fun looking for things on irs.gov, but there is a whole section on CARES Act funds. Expanded forgivable expenses are permissible for any unforgiven PPP loan. And I mentioned the simplified form for loans $150,000 and under. And then again, forgiven PPP loans are not federally taxable income. EIDL. So economic injury disaster loan, which I will be referring to throughout as EIDL, provides economic aid to businesses experiencing a temporary loss of revenue due to COVID-19. So the Economic Aid Act extended the deadline to December 31st of this year. Before, they were kind of doing it a couple months at a time, but now you have till the end of this calendar year. EIDL is, it's a great program. This one is different from PPP in that it is directly through SBA. So in this case, you would not be applying through a lender. You would be applying through the SBA's Office of Disaster Assistance. This is open, this is funded. In fact, we recently increased the maximum loan size. So in kind of the pre-pandemic world, the maximum EIDL loan amount was $2 million. What it got lowered to $150,000 because of the huge demand that we had. This was the first time that we'd ever had a national disaster declaration. This loan program was traditionally more for physical disasters. So, an earthquake, a flood, a fire. So normally it would impact, several counties at most. But this is the first, nationwide pandemic, which has made a lot of businesses eligible. But like I said, they've finally increased it from 150 to 500,000. This is a loan. There is no forgivable element of this. This is not a grant. So it is a 3.75% interest rate for businesses, 2.75% for nonprofits. It's a 30-year term. Again, no prepayment penalties. So, if business starts to take off again and you want to just pay it down, no penalty for doing that. Loans over $25,000 are secured by UCC filings. And for that, $100 will be deducted from the loan proceeds. In terms of eligibility, qualified small businesses, cooperatives, and agricultural enterprises with 500 or fewer employees, or defined as small per the alternative size standards, which you can find at that website, and then private nonprofits. So throughout, I always say business, 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 because that's who I'm kind of used to being our core customer. But you'll see that these programs they do vary. For some, it's just for-profit businesses. For some, it's for-profit, nonprofit. For some, it's agricultural. For some, it's not. And then when we get into Shuttered Venue Operator Grant and Restaurant Revitalization Fund, those have even more specific criteria for who is eligible to apply. So yeah, depending on what type of entity you might be on this call here, some of these programs may or may not be available to you. So I mentioned the loan limit was increased. So now it's up to 24 months of economic injury with a $500,000 max. Before it was $150,000. And so if you've already received one of those loans up to $150,000 and you want to get up to 500 or anywhere in between, then we have a new email address that you can reach out to. So COVID EIDL increase requests at sba.gov. with the subject line EIDL increase. And then hopefully you still have your 10-digit EIDL application number. That's really helpful in moving the process along more quickly. Other good news is that all SBA disaster loan payments are deferred. So loans made in 2020, the first payment is due 24 months from the date of the note. Loans made in 2021, the first payment is due 18 months from the date of the note. And again, that's a kind of a number they've continuously been increasing. You know, it was, I think, only 6 months in the beginning, but there was an expectation that the pandemic would be shorter. But now, kind of in recognition that things are still difficult for many businesses and nonprofits, they've extended that period of deferment. Debt relief for certain SBA loans. So this is for borrowers who have those traditional SBA forms of debt, so 7A, 504, and microloan borrowers. It is also for new borrowers in those programs. So for a new 7A, 504, or microloan approved on or after February 1st of this year and through September of this year, SBA will pay 3 months of principal and interest after the loan is fully dispersed and after any deferments, capped at $9,000 per loan per month. And this does actually come up for folks who normally have purchased commercial real estate. Borrowers do not need to apply for the debt relief. The SBA provides it automatically. So again, this is one of those ones where you wouldn't like come to us and request it. Your lender would help you facilitate it. And the lenders are basically just doing it automatically. This isn't something that you as a borrower would have to request. And this has been going on for a while. So if you're an existing borrower, if you already had a 7A, 504, or a microloan, then you have already received these payments. And if you had that loan from before the pandemic, this is actually the second time you're receiving these payments. Internally, we call them Section 1112 payments. So that's what you see there in that next bullet point. So we did, I don't know that it was the best idea, but we did actually communicate directly with borrowers, even though this process does happen through your lender. So if you wanted to see a sample of that Section 1112 borrower letter that went out, that is available on sba.gov/coronavirus. I don't think you even have to put the relief. I think you can just do coronavirus, but coronavirus relief. And that actually enumerates which borrowers were available for what amount over what time period. So I have had some people reach out directly to us, the district office, and say, like, you know, I suspect that I should have received debt relief or Section 1112 payments and I didn't. Why didn't I? And in that case, I have to send you back to the lender. Then it's the lender who then reaches out to me, and then we can work through whether or not the borrower in question was eligible. But if you reach out to me, we can't resolve it. It has to be the lender that reaches out to me to get through that. And yeah, per that last bullet point. So if you have debt relief questions, really your conversation needs to be with your lender. And then if they're right, if they're like, oh yeah, you're right, because of your NAICS code or the dollar amount, you should have been receiving X and you weren't. They are very motivated, the lenders, to work with SBA to get these payments made because they don't want to put stress on your business. They want to get this money from the government. It's much easier, it's much cleaner. And then they know that you can keep that money in your business and keep it going right now. Targeted EIDL advance. So I mentioned EIDL advance before. So that was that, you know, $1,000 to $10,000 payment that people received as they were applying for EIDL loans in the first round back in 2020. So targeted EIDL advance is a new variation on that program. So the big takeaway is no action is required by you as a borrower unless and until you've been contacted by the SBA via direct email and invited to participate in the program. So this program was set up by the Economic Aid Act, and it is only for businesses and nonprofits that applied for an EIDL and 1, are in a low-income community, 2, have suffered greater than 30% economic loss, and 3, have 300 or fewer employees. And so notice it's and, so you have to be all 3 of these things. So I have had folks contact me and say, that I qualify under 2 and 3, but I wasn't contacted. And that's because they weren't in a low income community. So, it's not, 1 or 2 of the 3, it has to be all 3. So if your business does meet the above, a targeted EIDL advance will, per funding availability, balance out a previous EIDL advance to a full $10,000. So if you did receive one, if you're like a sole proprietorship and you only received $1,000 in EIDL advance, with a targeted EIDL advance, you get the additional $9,000 to get it up to $10,000. And then it will provide $10,000 to those who applied for an EIDL but didn't receive an advance payment due to lack of funding. So this was like so many of these programs, we ran out of money. And so there were people who were in the queue who didn't get anything, but as long as they meet these 3 criteria, then they're able to get the full $10,000 now. So the SBA is emailing those who may qualify. Like I said, this deck is about 2 weeks outdated. I think at this point, everyone who is eligible for targeted EIDL advance has been contacted. And that contact included instructions on how to determine eligibility and how to submit documentation. So these are some of the items that were needed to verify, or are needed to verify eligibility and needed to be submitted directly to the Office of Disaster Assistance. So that was 2019 federal tax returns, EIN, SSN as specified in the original EIDL application, monthly gross receipts for 2019, 2020, and completed months in 2021. Confirmation that the information in the original EIDL application is still accurate. Changes may require a manual review and documentation. And then applicants initially eligible will be required to sign a 4506T for the SBA to obtain tax transcripts for further processing. And this 4506T, this shows up in a bunch of our programs. This is something that we send to the IRS, and then the IRS is able to verify the tax transcripts. This is taking a couple weeks right now, I think in part just because we're all working remotely, including IRS staff, and then in part because we do have these multitude of COVID relief programs that require a 4506T. So just we SBA are sending a high volume of these. With all of these programs, I would say, cross your T's, dot your I's, check any string of numbers that you're entering, whether it be your SSN, your EIN, the bank account number where you want the money deposited, because these, as I mentioned, are very high volume programs right now. When things can be automated, they can go a little smoother. When there's a hiccup because 2 numbers were transposed, or we can't verify that that's a real bank account because a dash was left out, or that you added an extra 0 or something like that, it's taking a long time. And depending on the program, sometimes the appeals process to get something modified can be difficult and slow. So you really just want to make sure like the first time you send it in is correct, because if you and your business partner transposed SSNs or something like that, and then it gets flagged for fraud, it's much more difficult than if you just really take a look, make sure everything, especially those SSNs, EINs, bank account numbers, but then every document that you upload as well is the correct year. If it says 2019, it is the 2019 version of whatever document it's supposed to be. It's going to save you a lot of time and heartache later on if it's right the first time. So while it's important to kind of move quickly on these, we are like running out of funding on some of them, it's also important to just make sure everything's accurate. For targeted EIDL advance, only one submission for each targeted EIDL advance can be made. Carefully review the bank account information. Ensure information submitted is 100% correct. I guess I was just a little bit ahead of this slide. SBA's goal is to process completed applications within 21 days. Applications may not be considered complete until after IRS Form 4506T is received. If you have any questions, targeted advance at sba.gov. And if approved, you will receive an email and an ACH deposit to the bank account provided. This is actually a slight improvement over the original EIDL advance, where it was just the ACH deposit was made and we didn't actually tell people that it was coming or that it had come from SBA. We were just telling people to like keep checking their own bank accounts. So at least they've tried to improve the communication this time around. Shuttered venue operators grant. So this one is pretty specific. So not sure if there's folks on the call, but maybe people who also listen to it later might be eligible for this. So there's over $16 billion in total available. The maximum grant size is $10 million. The eligible entities for this grant are live venue operators or promoters, theatrical producers, live performing arts organizations and motion picture theater operators, relevant museum operators, zoos and aquariums who meet the specific criteria, talent representatives, and there's a maximum of 5 business entities related via affiliation. For example, 1 parent firm and 4 subsidiaries that also meet the eligibility requirements. And you must have been in operation as of February 29th, 2020. So this actually has, and this again, where these slides are outdated, but this is what we have from headquarters to present on. This opened last week. So I believe we've been accepting applications since Monday. We'd initially opened up the portal on April 8th, and the demand was so high that it crashed the portal. So they had to take it offline, make some updates. And then, like I said, it started again last Monday. So the portal didn't crash this time. We've successfully had tens of thousands of applications submitted through the portal. Again, 16 billion sounds like a lot, but with a maximum grant size of $10 million, this money could go pretty quickly. There are a lot of very large institutions that I think are going to be applying for this, as well as many, many, many smaller ones. So if you think you're eligible, if you're considering applying, I would definitely say move ahead with your application, get into the queue. And how do you do that? So one of the things that you need to do is get registered in the federal government system for awards management, which is sam.gov. And most shuttered venue operators haven't ever had to register with that system before. We do have a video, if you go to the SBA's YouTube channel, specifically on registering for on sam.gov for the SVOG or Shuttered Venue Operators Grant. I would recommend checking out that video before you go through the process. We also have a pretty extensive frequently asked questions, which includes a preliminary checklist and eligibility requirements, and then some of those video tutorials that I mentioned. So sba.gov/SVO grant for all of that great information. To determine the amount of your potential grant, it will be the lesser of $10 million, or if in operation on January 1st, 2019, 45% of the 2019 gross earned revenue. If you began operation after January 1st of 2019, the average monthly gross revenue for each full month in operation during 2019 multiplied by 6. So this is a great matrix, but as I mentioned, it is a little bit outdated. So I would recommend actually going to the website. So if you go to sba.gov/coronavirus relief, there is an updated version of this matrix that includes the Restaurant Revitalization Fund. And so this just kind of shows you, if some of these programs are mutually exclusive and some you can have both. So like if you have received PPP, you can apply for EIDL as long as you're not using the proceeds for the same purpose. However, if you've received a PPP while you, let's see, it's, so you, right, so like if you have an SVOG, then you cannot apply for a PPP, but if you have a PPP, then you can, it's just, it can be complicated. So how these interact, and in some cases, the PPP amount will be deducted, and in some cases, they're compatible. So like you can't get an SVOG and an RRF, and both are open right now, and neither have funded anyone yet. So it's, if you think you might qualify as both a shuttered venue, but also a restaurant, and you're trying to determine which one should I apply for? You're right to be choosing between the two. You should not be applying for both, but it is hard to say, which one's going to fund quicker. They have different application processes. So, this is kind of a good time to be like doing your research and making sure that you're not applying for incompatible programs. But like I said, this is out of date. Check out the one on SBA.gov. So, yeah, this slide is kind of as of a couple days ago. So the supplemental targeted advance payments, so that's a $5 billion fund for $5,000 payments to the hardest hit businesses. So, this is no longer theoretical. This has started as well. So the supplemental targeted advance, like the targeted EIDL advance, is not open to all businesses. It's open to only a subsection. And I believe we are reaching out to the folks who are eligible for supplemental targeted advance, same as we are with targeted advance. So that's not necessarily one you would apply for. Restaurant Revitalization Fund, I have a whole nother deck that I'm going to switch to and do a little bit more on that. Community Navigator Pilot Program. This we still do not have details on. I think we might be getting details as soon as this week, but this is more of a program for the nonprofits that help us get the information out. So this isn't necessarily like another grant program for small businesses. This is grants to eligible organizations supporting our effort to improve access to COVID-19 pandemic assistance. So when we have more details on that, we'll share it. So I'm gonna switch decks now. All right, put that one in presentation mode and share that screen. I apologize for the awkwardness of having to switch decks, but we have 2 approved decks from headquarters that we are allowed to share with you. We're not supposed to make changes, so I can't just combine them. I will share these both with the chamber in case they want to share them with folks who've called in today or folks who even missed today. So, great if you've been taking notes, but I can also send these around so that if you weren't taking notes, you can still have all this information. And then there's also a lot of links in the presentation. But again, just with the caveat that this is like, both of these decks are like slightly outdated already. So the best source of information is the website. So Restaurant Revitalization Fund literally went live, I think 2 hours ago now. At 9 a.m. this morning, they started accepting applications. So it opened for registration on Friday, but actual applications were being accepted as of 9 o'clock this morning. So this went into law March 11th of this year. This is also part of ARPA, American Rescue Plan Act. It has $28.6 billion. Again, that seems inadequate for the amount of demand that we know is out there from restaurants. So this money probably will go fast once these awards are made. We don't have a date, so it's not like we're accepting applications until X. Basically, we're accepting applications until we run out of appropriations. And then this is one of those ones where maybe Congress will give us more money if we run out quickly. Maybe they won't. So you have to kind of go with the assumption right now that the 28.6 is all we're getting. Funds must be used for eligible uses no later than March 11th, 2023. So basically, if you are successful in getting one of these payments, you need to spend the money in the next 2 years. So even though it's called the Restaurant Revitalization Fund, there are many types of entities that are eligible that are not just restaurants. In general, eligible entities are businesses that are not permanently closed and include businesses where the public or patrons assemble for the primary purpose of being served food or drink. So that does include restaurants, but it also includes food stands, food trucks, food carts, caterers, bars, saloons, lounges, taverns, snacks and non-alcoholic beverage bars, And then we get into kind of a different category, and you'll see that all of these have parentheticals. So for all of the other types of industries listed here, they have the caveat that they might be eligible as long as on-site sales to the public comprise at least 33% of gross receipts. So, you know, in general, again, if you kind of think of that first, like who's eligible, this is a program for businesses where the public or patrons assemble for the primary purpose of being served food or drink. So if you're doing a lot of wholesale business, then that is not going to necessarily be eligible because it's a different business type. Sorry, my husband came in and distracted me, but I'm back. Who is ineligible? So entities are ineligible if any of the following applies. So if the entity is a state or local government operated business, ineligible. As of March 13th, 2020, owns or operates together with any affiliated businesses more than 20 locations, regardless of whether those locations do business under the same or different names or are even in different industries. So these kind of affiliation rules are like specific to this program. This isn't necessarily normally how our affiliation rules work in other programs. But just kind of keep that in mind if you are in a situation where you do have affiliation with more than 20 businesses, even if they're not all restaurant or food industry businesses. If you have a pending application for or have received a shuttered venue operators grant, you are ineligible. If it's a publicly traded company, is permanently closed, is a nonprofit organization, or is not eligible for funding of at least $1,000. So the minimum payment we're making is $1,000. So if you do the math and it looks like that's not, you wouldn't be eligible, you know, maybe don't go through the application process. And so how much am I eligible for? SBA may provide funding up to $5 million per location, not to exceed 10 million total for the applicant and any affiliated businesses. Minimum award is $1,000. How is this program different from other SBA programs? So good news on this one, applicants do not need to be registered in sam.gov. If you remember just a couple minutes ago when I was talking about the shuttered venue operator grant, for that one, sam.gov registration is required. For this restaurant revitalization fund, it is not required. So we do not require a DUNS or a CAGE identifier. And if you don't do government contracting, you might not know what a CAGE identifier is. And now the good news is you don't have to know because you don't need one. Valid unexpired ITINs are acceptable. This is true with some of our other programs, including PPP. However, we have run into some issues with ITIN holders being bounced out of the system for having expired ITINs. So if you are an ITIN holder, and these are two links to irs.gov because we don't have anything really to do with ITINs. You know, they're administered and maintained by the IRS. So you want to make sure that you that your number has not expired, basically. You can document that with correspondence from the IRS. You can show one of the things that makes an ITIN expire is not having paid federal taxes in the last 3 years. So, you know, proof that you have done that. And then if it has in fact expired, you should go as soon as possible and renew with IRS so that hopefully you can apply before we run out of funds. So let's see. As I said, you know, you have to be a for-profit, but kind of beyond that, we tend to be agnostic as to what type of for-profit you are. So any of these would be acceptable. Franchises. So any business concern operating as a franchise and meeting all other program requirements is eligible. The franchise must be listed on the SBA franchise directory. So in the application portal, applicants will be able to look up their entity on the SBA franchise directory. So that's kind of a nice tool that's actually within the portal for applying. However, if you're not yet at the point of applying and you just are curious what's on the SBA franchise directory, that is publicly available. Just Google SBA franchise directory. It's an extremely long Excel spreadsheet that lists the franchises and then lists the eligibility for different programs. So there is, make sure you kind of go across the row and look at all the columns, because there's information in there that might be relevant to 7A or PPP that's not the same as the eligibility for RRF. So definitely take a look at that if your business is a franchise. And if your brand is not listed there, it doesn't necessarily mean that it is ineligible. It might just mean that it hasn't been submitted to SBA for review yet. So the franchisor must submit the franchise disclosure document or other agreements, and all other documents of franchisees is required to sign to franchise@sba.gov for review. And you would get an automated response that they have received those documents, and then hopefully within the next couple of weeks you will receive a response about eligibility. They're normally more responsive than a couple of weeks, but just there's a lot going on right now. So just because you don't hear a response immediately doesn't mean also that you're ineligible. It just means that we have lawyers that actually have to look through each of the disclosure documents that were provided. And okay, I got a little bit more time. So I'm going to go through a couple more slides and then I'll pause and we can do some Q&A. So I won't necessarily get through all of the Restaurant Revitalization Fund content, but I will say that we've done 2 national webinars that are available on the SBA.gov YouTube channel. And the 2 RRF websites I would suggest going to, if you're thinking about applying for RRF, go to restaurants.sba.gov. The portal is live, has been live since Friday. And then if you just want information about the RRF, go to sba.gov/restaurants. And when you go there, you can see we don't have an FAQs this time. We're calling it a knowledge base that has answers to a lot of questions. We also have a copy of the form that is what you would be filling out electronically through the portal. And also our RRF is a little different in that we are accepting applications telephonically. So, you're listening to this, you're on this, so presumably you have connectivity and you could use the online portal. But if you know a restaurant owner who doesn't have a laptop, doesn't have a smartphone, or is maybe in a more rural area where it's hard to connect, they can apply over the phone. It will probably delay their processing somewhat. So if that person has the ability to drive to a library or another place where they could use the internet, that's probably more advisable for how they should submit their application. But if they need to do it over the phone, we do have that option. In terms of bankruptcy, who's eligible? Applicants that are operating under an approved plan of reorganization under either Chapter 11, 12, or 13 and meet all program requirements are eligible for funding. However, they are not eligible if they are permanently closed, filed a Chapter 7 liquidation bankruptcy, or filed for either a Chapter 7, 11, 12, or 13 bankruptcy and are not under an approved plan of reorganization. And when we say permanently closed does not include businesses who temporarily closed their doors due to state or local restrictions or other pandemic causes, but are still in operation or have reopened. So how do other SBA relief programs impact RRF? So any funds already received through the PPP will be subtracted from the applicant's final funding amount. The applicant is verified using the EIN, ITIN, or SSN associated with its PPP loan. If the applicant received a PPP loan, the applicant must use the same EIN number for its RRF application as it used in its PPP application. If an applicant applied for a first draw PPP loan for multiple locations under one EIN and subsequently applied for a second draw PPP loan under different EINs, the applicant must provide the EINs for each entity that received second draw PPP loans. And upon applying for RRF, applicants must withdraw any outstanding PPP applications. So if you are currently in the process of applying for a PPP but haven't received it yet, and you want to apply for an RRF, you need to reach out to your lender, make sure that application is fully canceled. And again, if and when we run out of money for PPP, this might become a moot issue as there will be no pending PPP applications anymore. but you are certifying when you apply for an RRF that you do not have a pending PPP application. So it is important that you actually have worked with a lender to cancel that. And then, as I mentioned before, so some of these are mutually exclusive. So in this case, the applicant must not have a pending application for or have received a shuttered venue operator grant from SBA. So it's one or the other, RRF or SVOG. Another attestation that all applicants must make is that all applicants must certify that current economic uncertainty makes the funding requests necessary to support ongoing or anticipated operations. What are the eligible use of funds? I mean, the good thing about RRF is it's real broad. You know, with our other programs, there's kind of, you know, you can use it for this, but not this. We really have kind of opened it up for RRF. So business expenses, it's for the most part, most valid business expenses. So payroll costs, utility payments, maintenance expenses, supplies, food and beverage, supplier costs, and then operating expenses, which includes things like marketing, which legal, like I don't think that's available in a lot of the other programs. So really different under this one. Construction expenses, so kind of construction of outdoor seating, especially given the current circumstances and the fact that people are being, you know, encouraged to dine outside when possible. So that is eligible. However, expansion costs are ineligible. So, you know, things are going so great, we're going to open up a second location. That would not be eligible. You would need to get kind of a conventional loan in that case. Business debt, so payments on any business mortgage obligation, both principal and interest, not including any prepayment of principal or interest. And then business debt service, both principal and interest, does not include any prepayment of principal or interest. I mentioned this at the top of the RRF section. So basically there's going to be a 2-year period for the restaurant owner to use the funds. If the business does permanently close after receiving funds, the covered period will end when the business is permanently closed, or on March 11th, 2023, whichever occurs sooner. And any funds not spent on eligible expenses by the time the covered period ends must be returned to the government. So, you know, this is kind of new ground for both of us, for you as a restaurant owner and for us as a federal agency in terms of assessing you as like a for-profit using grant money. So how will that use of funds assessment go? After the total awarded funds have been exhausted, the entity must provide a detailed expenditure report and certification for the required period. So until applicants complete the use of funds assessment beginning December 2021, applicants are required to provide self-reported, unaudited data detailing use of distributed funds each year through 2023. And so that's on a calendar year. So December of this year, and then December of 2022. And then since the next period is March 11th, 2023, it obviously won't be December of that year. If you use up the money, you can stop making these reports. So if you used up all the money by December 2021, you do not have to do another report in the following year. And we are awaiting further guidance that outlines the detailed reporting requirements and procedures. So we don't have kind of like exactly what that reporting looks like available just yet. So only 5 minutes left. I don't know if there's any questions that have come through on chat. Natasha's.
No questions come through on the chat, but we can open it up if anybody has any questions.
I do have a question. This is
Yeah.
Lars from the city of San Leandro. I have a question about the RRF eligibility. If a business is in limbo, so to speak, we have a business who was forced to shut down for a little while, then was able to reopen, and then recently their lease expired. They were unsuccessful in renegotiating a new lease, of course, because they weren't able to afford with their current revenue what the landlord was asking. So they have actually closed. We are trying to find them another location in town. I mean, could they even apply for the RRF, or should they apply for a shuttered venue grant? Could they apply for either or neither?
Yeah, that's hard because that does sound like a business that might fall into the permanently closed category. Like if they were kind of past that and had the new location and had the new lease and were operating under the same EIN, I think there might be an argument that could be made. But right now, as it stands, I don't know that they would be eligible. I will say that I personally can't make eligibility determinations, so let me get the 800 number. So the number for the folks who do have that ability is 844-279-8898. And that is the call center hotline for, so that's just RRF. So, you know, don't call them with SVOG or PPP or any other questions. That's just the RRF folks. But because yeah, we do have some folks who've changed locations during the pandemic and we're wondering about their eligibility. And I think there's more of a case to be made there that, you know, it's the same business, it's just in a different location. But if they don't have that new location yet, I mean, it's a possibility it could be permanently closed.
Okay. Thank you.
Awesome. Oh. Any other questions for Marlo? Thank you, Marlo, so much for.
Yeah, I'm just going to share this screen again, just so that I put that number up that I just said for people who like visually. Yeah, and I will say, you know, we're here at the district office to answer the questions that we can. There are going to be a lot that we can't answer. Some of these programs, SVOG and RRF in particular, are still a lot of questions are kind of in the like awaiting further guidance category. So, you know, check out the website, reach out to us at the local district office, SFO mail at sba.gov, or, you know, I'll put my my personal email address in the chat. You know, you can reach out to me personally with questions. You know, as much as possible, we're here for you, but there are some questions where we have to send you to the Office of Disaster Assistance or the Office of Capital Access or one of the other parts at SBA because we're not able to answer those locally.
Well, thank you, Marlo, for joining us again today and bringing us up to speed. And so glad to see that there's so many more funding opportunities for some of our businesses here. So we'll be sure to share this beyond this event and make sure people have access to this information after, and I'll take the PowerPoints to share as well.
Excellent. Yeah, I'll follow up with those.
Thank you so much.
Happy Small Business Week.
Happy Small Business Week. Thank you again for being here today. We will see you guys on the coming calls. Following this at 1:30, we're joined by Myers Nave to hear about employment law and all the HR related items about who can return to work after COVID, when and how. So please join us there to get that information. Thank you all for being here. All right, thanks so much.